OMPEG stands for Overseas Maharashtrian Professional and Entrepreneurs Group, a community-based networking group founded in April 2016 by leading influencers and entrepreneurs within UK. The idea was to inculcate a spirit of entrepreneurship within the Maharashtrian community, specifically from the UK, to connect professionals and encourage them for entrepreneurship. OMPEG is a membership organization, which means people pay fees here and contribute to the growth and initiatives by OMPEG. There are over 150 fee-paying members, which include a variety of professionals and entrepreneurs. And the number of members are growing day by day. Details regarding becoming a member will be posted in the chat window. We are very proud to say that 40% of the members are women and who are first-generation entrepreneurs. In last 5 years, OMPEG organized 40 high-value events, including 2 mega business expos attended by more than 2,000 people. The expos were a very high success. Until now, 5,000 people have attended OMPEG across the UK. In 2019 and 2020, OMPEG started collaboration with High Commission of India and many other industry bodies with the idea to inspire many more Maharashtrians to do more in their profession and in their businesses. The goal was also to raise the profile of UK-based Maharashtrian leadership, business leadership, and we are proud to say that OMPEG has successfully done that. Just a few months back, we have started our Midlands chapter to take advantage of the thriving region in and around Midlands. If you want to know more about OMPEG, please visit www.ompeg.org.uk. If you wish to become an OMPEG member, we will put the details in the chat window. On a personal note, I highly recommend becoming a member as I run my own architecture practice and I have been hugely benefited since I joined OMPEG. In order to connect with everyone on OMPEG, please download OMPEG's very own app called My OMPEG app. It's called My OMPEG, available on both iOS and Android. Anyone can download, connect, and engage. Special content privileges are given to fee-paying members. So that was about OMPEG. Now I will move on to the webinar. Regarding the Q&A session, we will keep an eye on the chat and at the end, call out the names and unmute them who want to ask questions. So please ensure your Zoom name is correct. Otherwise, it can become tricky to call out your name. Please note, preference will be given to member questions. Also, like I said before, if there are any Q&A questions, you can put them in the chat window. The chat log will be given to the speaker so they can get in touch with you in case your question is missed and not addressed. Now, a bit about Nayan, today's speaker. Angel investor into early stage businesses and active mentor, Nayan has over a decade of experience in leadership, strategy, and business development. Nayan has advised governments and CXOs of the largest brands globally to build and sell businesses, including at Siemens, Rolls-Royce, Wood Group, and Champion Technologies. With a master's in international marketing management from Aberdeen Business School and Finance from London School of Business, Nayan started LK Housing, a global real estate development business. With the vision of building the largest Euro-Asia investment and growth corridor, Nayan is at the forefront of many Euro-Asia initiatives for which he was recently awarded 40 under 40 leader in the EU-India corridor. Nayan is also a FA trained football coach supporting grassroots football clubs in the UK. This was a bit about Nayan. He will introduce us more to what he has been doing and what he's expert in. All the best, Nayan, and over to you.
Thank you, Mayura. That was a very kind introduction. And hello, everyone. I'm glad to speak to everyone on a Saturday afternoon. And apologies, I know there is a bit of a confusion on the email that was sent out. So thank you for joining, and hopefully you will get to learn a little bit more about startup investments today. I'm going to share my screen now, and is everyone able to see my screen?
Yes, we can.
Okay, excellent. So let me just put this aside. Right, okay. So I think as a format mentioned, I'm just going to run through the slides. I've got around 20 odd slides here, which I will just present. And then after that, I'm very happy to take questions, and we can have more of a dialogue thereafter. So as a group, we are JPIN VentureCatalysts, and we are into startup investments. And we have a vision of building the largest UK-India investment corridor for startups. And as a group, we have various touch points to help startup build from the very early stage till it becomes, a large business on its own and listed or acquired by some other businesses. And thank you again to OMPEG for giving me this platform to talk to everyone today. So giving a bit of an introduction on, our business. So we, as a venture catalyst group in India, are early stage investor and leading number one player since 4 years now. And also globally, we were ranked number 3. So if you have heard of startup investors like Y Combinator, Techstars, and others, we are right up there as a global player now, investing into startups. Last year, in 2020, we invested in 102 startups. This was in India, in US, in the UK, as well as in Canada and many other parts of the world, but primarily focused on India. And up till in 2019 and before, we have invested in over 150 startups, and in a value of over $225 million. In total, 273 plus deals. And we have gone through a lot of opportunities, and then we have invested into select startups. So, we have a team which is spending a day, every day of their hour in terms of evaluating startups. And we've gone through 15,000 plus startups and come to, invest into only 150 startups. So just to give you a bit of an idea of the who is in the team. So we have 6 founders in this business. Dr. Apoorv Sharma, he's received the award from the President of India, Dr. Abdul Kalam in India, for building the best startup incubation in the country. He's been in the space for over 20 years, and he's seed funded startups like Oyo, which is now a decacorn. And a decacorn is a startup which is valued at over $10 billion. And it is one of the largest startups of the world. Then I think just to give you a little bit more background, as Mayura mentioned, again, I've been in the UK for 15 years. I have done my master's here in the UK and then worked for some of the largest corporates, did a lot of M&A, and then started JPIN. And as a group, we have been investing into startups for many years now. And Gaurav also is on the call today. And when we are doing the Q&A, he will also be there to answer the questions. Has extensive experience, has worked for some of the largest family offices globally, and also done multi-billion-dollar transactions with companies like Thomson Reuters, Relex. Then we have other co-founders, again, Gaurav Jain, who is part of, he was the first employee of Mukesh Ambani's Reliance Venture Capital Fund, as well as the Stanford MBA. Then we have Anuj Golecha, who is 40 under 40 in India, alternative investment managers, a chartered accountant by practice, and invested in 100 plus startups. And then we have Anil Jain, who is again, one of the traditional businessmen, but again, has invested in over 100 plus startups. So we have a very good mixture of people who come from technology, from experience of different markets, who together we have been building this entire large ecosystem. As an advisory board, again, we have a very solid advisory board. We have Ritesh Agarwal, who is the world's second youngest billionaire. Ritesh Agarwal has recently joined our board and one of the shareholders in the business. Mr. Damani, who is again, owner of DMart Group. He is also on the board. Mr. Dharmesh Katani, again, a very large real estate group in India. Mr. Kamal Agarwal. So if you are from India, you would know the Haldiram Group and the Haldiram brand. Inam Securities, Again, very big into IPOs. And then Ashok Shah, again, very big transport group. And then in the UK, we have a very strong panel of people like Vijay Goyal, who is one of the largest, he's a partner in one of the largest law firms, Singhani and Co. And then we have people like Mark Brownridge, who is the Director General for Investment Enterprise Scheme in the UK. And people like Rajiv Kapahi, again, very experienced in the healthcare industry and so on. Another very important piece for everyone, we are FCA authorized. And that is a very important thing to take, when you are operating in the UK and you are advising or you are dealing into investments, you have to be regulated. And, as an entity, we are full-time into this business and are regulated by FCA. So, one of the reasons why all of you are here today is to learn about startups. And in startups, US has always been the one which has been spoken about, the Silicon Valley. And US has really been the one who has come up with startups like, if you think about all the biggest of the startups like Uber and WhatsApp and, the Facebooks of the world, they all started in US. And US, I would say 20 years ago, started the entire startup ecosystem and has produced over 200 unicorns now. A unicorn is a company which is valued over $1 billion in its valuation. And there are over 400 companies now in the US which are now soon to become unicorns. But China 10 years ago overtook the startup in ecosystem of the US and really invested heavily into the economy, and therefore it actually surpassed recently the number of unicorns. And in China now there are 206 unicorns and 2,000 in the making. So China has really gone ahead in terms of the startup ecosystem generally. And the third biggest startup ecosystem now is actually India. India is now having 34 unicorns, and you would have heard some of the names like Flipkart, Oyo, Paytm, which are some of the biggest startups of India now. And there are more than around 282 soon to become unicorns. So India is experiencing tremendous growth, 300% growth in startups in tier 2 and tier 3 cities especially. So most of the good founders are coming not just from Mumbai or Bangalore or Delhi, but they're actually coming from tier 2, tier 3, tier 4 cities. For example, Oyo founder came from tier 3 city. So we are always looking for we are always looking for entrepreneurs from across the country. And also internet has become a big reason for a tremendous growth. Jio has practically made internet free in India. 627 million internet users now and 40% internet penetration. So that is one of the largest in the world in terms of the market size. So as a business, we are not just in the metropolitan cities, but we are based in 40 plus cities now. And the reason why we are based in 40 plus cities is because we want to identify opportunities and entrepreneurs from every part of the country and also help our startups to grow in every part of the country and build their businesses further. And we have similar ambitions to grow in the UK as well. We started from London, but we are building our capabilities in Manchester and up north, as well as going up to Scotland and Wales as well. One of the reasons why it's important to have this widespread capability is because just sitting on in Mumbai or sitting in Bangalore, you will have a very you can only do desktop research, but when you have people on the ground and people who can actually give you real data points, it makes a big difference in terms of understanding the real pain points of a startup and a real pain point that they're trying to solve. So as a business, we are focused on investing into startups in India as well as the startups in the UK. So we invest into startups both which are looking for very early stage startup capital, and also startups which are looking for much larger scale investments. And typically we look at investing anywhere between $500,000 going up to $20 million in size. So coming to the topic now in terms of startups, and for people who are new to understanding about startups and what they are, how do you first of all define a startup? So, for me, when I look at a startup, it is not the size of the startup, not the revenues of the startup, but purely whether the startup is looking to grow, a business which is looking to grow very fast and scale very fast. So companies like TransferWise that you would have heard of, it's valued at over $1 billion now. Deliveroo is, these companies are all having employees of anywhere between 100 to 2, 3, 5,000 employees now. So in a traditional business sense, these would be large scale businesses now and not startups, but they're still startups because they are trying to grow very fast, and they are all asset light and they're scaling every day. And that is the reason why we call them startups. So a startup can be one which is, just starting up and having one employee and, just having £1,000 revenue. And it could be a startup which is also having £1 million revenue with 1,000 plus employees. Again, what are the different investment stages in a startup? So, you would have heard in news that a startup has raised Series A, they have raised Series Bs, the startup is raising a seed round. But what does it really mean? So usually when a startup has come up with an idea, uh, one first thing they have to do is they have to talk to their friends and family and their connects, their close connects, and try to validate that. And that's when the friends and family and close network put in some capital into the startup founders, and that's what we term as friends and family round. And typically that is anywhere between $50,000 to $100,000, and this is where the startup builds their MVP, the minimum viable product, or they will build a platform through which they're going to start doing the business. From there on, there is something called a seed and angel round, and this is where usually in a startup entrepreneurs come to us, and we are usually the first institutional angel investors who will give a startup anywhere between $500,000 to $2 million and support them for their growth. And through our ecosystem, we will really nurture them to grow uh, fast. Then what happens is after the seed and angel round, they will go into a Series A round, and Series A round is where you will have venture capital funds coming in. Venture capital funds again have various stages. So you have early stage venture capital funds, which will put in capital of anywhere between 2 million to 15 million, and then you have late stage venture funds, which are putting in anywhere between 20 million up to $100 million. And then what happens is between Series B to IPO, there is something called as private equity. So sometimes when the startup becomes really big, you also have a private equity player who comes in and puts in 100 million plus into a startup. And then finally, the startup will be then acquired by another player, or it will list itself into the stock market, and it'll have an IPO. And then it takes its own journey from there on. Evaluating a startup. So again, one of the key reasons why most of you are here is also to learn if I am investing into a startup, what is it that I should be looking for? So these are again, there are 100 data points that we look for in a startup. But just to give you a very broad brush in terms of what are we looking for, you first and the most important point is the founders. How are the founders? What is the founder's background? Are they mentorable founders? Who is in the team? Do they have enough knowledge within the team to actually build a very large business? Is this a founder which I can put my capital and he can run $1 billion business? So there are a lot of data points that we are looking for in a startup founder and his team before we look to invest into them. Then we are looking for whether the idea that they are presenting, is it actually truly disrupting? Is it a unique idea? So we look for startups which are either category creators or category leaders. And again, some of the examples I can give here is a startup like Beardo, where Beardo is a men's grooming brand that we invested in, and there wasn't any brand which was a leader in India in men's grooming. So when they came to us, they said that there isn't anyone who is leading in this space. Can we start something in this space? And we gave them the capital, and now they're one of the leading men's grooming brand. Similarly, we invested into a startup called Safe. There wasn't a leading woman hygiene brand. We invested into them, and now they're one of the leading woman hygiene brands of India. Market. So this is another very important point. If a startup founder comes to us and says that they're trying to disrupt the market, but the market size is only 100 million, then even if you are one of the best solutions, and you are trying to, even if you get 20 or 30% of the market, that is only 30, 40 million. So we are looking for market size of at least a few billion, if not 1 million. But and the reason is because generally we are expecting that you will not be able to capture 100% of the market. You will only be able to capture 10 to 20% of the market. But even that 10 to 20% of the market has to be a very large market size. The other important point, which a lot of founders, a lot of startups, don't realize, is that they have to continuously raise capital. So a lot of founders think that when they have raised their first few rounds, then they will have the positive unit economics or positive revenue and profits, and then they will not require to raise capital. But we are not looking to back such startups. We are looking to back startups which are looking for exceptional growth. And to have that exceptional growth, you need to continuously raise capital. And we are looking for founders who have the ability to raise that capital. Um, Again, we are also looking for startups which are having a good product market fit. It cannot be a solution which you have just created without having a good understanding of the real problem. So it needs to be a real problem and a real good market fit. And then finally, very important point for most investors is the unit economics. The unit economics is something where if you have acquired a customer, and then during your acquisition, it would have cost you, let's say, a pound or 10 rupees or whatever is the cost that is happened to acquire the customer. And then once the customer is in your in your platform, how long is he going to stay on your platform? Is he going to just use your service once, or is he going to use your service for 1 year, or is he going to use your service for 10 years? And during his life journey, is he spending 100 rupees? Is he spending 100 pounds? So that 100 pounds versus your acquisition cost, is it a positive unit economic? So that is what we're looking for. And then finally, we are looking for a scalable asset light model. So we are not looking to invest into a factory where you have to put in 100 million to build a product. We are looking for businesses where you can outsource a lot of those services, and you are building a model which can then be easily replicable into various countries, not just in one country, but it needs to be a global service or a global product. What are the benefits for investing into startups? So, again, the reason why most of you are here is to understand also what is there an economic benefit? Why am I spending so much time on a Saturday afternoon to listen about all this? So this is, for me, one of the most important slides. If you haven't got anything from this presentation, the one thing that I would pay attention on this slide. So we invested into all these startups, and these are all like the startups that has given us tremendous returns. So, for example, this is a startup which is called as Bharat Pay, and in Bharat Pay, this is a fintech startup that we invested into, and we got a 75x multiple. Now, what does that mean? So we invested, let's say, for example, if we invested 1,000 pounds into the startup, we made 75,000 pounds out of it. So imagine if I've made 100K, you have made a 75 times of 100K. And the proportion then changes. So if we have invested 1 million, we have made 75 million out of that startup. So this is how the startup ecosystem works. If you invest into a startup at a very early stage, and if the startup does really well, then you will make a multiple in that startup. So we are not in a business of having an IRR of 20% or 30%. We are not looking at a mutual fund kind of a return or any other kind of an asset class return where we're talking about 18 to 20% return, but we are talking about multiples. And these multiples have happened over a period of 2 to 5 years. So, for example, Bharat Pay, we have got this multiple in a period of 2 years. Kutlut, we have got this multiple of 22x in a period of 2 years. Some companies, for example, Beardo, it happened over a period of 4 years. So, it really depends on the startup, how fast it scales, and then your ability to get an exit from the startup. And that's how you make a multiple. And again, I'm sure people have questions around exits. I will be very happy to take those questions towards the end. So some of the other benefits, this is another very big benefit for investors in the UK. So investors who are investing into UK startups, government also gives you something called as Seed Enterprise Investment Scheme and Enterprise Investment Scheme, where you get a 50% tax relief or a 30% tax relief, depending on which scheme the startup is in. And then there are capital gain benefits, there is inheritance tax benefits, there's a loss relief as well. So, there are a lot of benefits of investing into the startup if it's a UK-based startup. Unfortunately, in India, there is no tax benefit for an investor. But then, we are talking about a multiple there. So you have to think about two things. One is that with whether the startup is going to give you a good multiple. So that is the first benefit that you're looking for. And secondly, if it's a UK startup, then the cherry on the cake is that it is giving you the tax benefit as well, which basically gives you an instant return as well. Again, next few slides, I just want to go through some myths that people have about startups, and hopefully this will help clarify some of them. So people think that startups is equal to technology. So that is not the case. It is not. When people say that we are investing into health tech, we're investing into fintech. So it is, yes, technology is an enabler for a lot of these businesses, but startups is not just about technology. It could be non-technology businesses as well that you can invest into, and we have made extremely good returns on non-technology startups as well. And this is just a few examples of non-tech startups that we have invested in recently. Again, a startup first seed round can be anywhere between the $50,000 and it could go as much as $20 million as well. So what we don't look for is, that, okay, the startup is only looking for $50,000, so we are going to give them 50K. We can also give in a seed round up to $2 to $3 million as well. Recently, one of the startups came to us and they were looking for their first check, and we gave them a $2 million check. So a seed round can also be a much larger check as well. Another myth that people have is that in India only Indians are investing. So this is just an example that in India global investors are now looking to invest into India. We have, and all the names here are of the people who have co-invested with us in our startups. And these are companies like Google and Facebook, which everyone knows of. But there are companies like the Dell Computers, the owners of Dell. They have invested into a startup with us. The Adidas family office, they have invested into a startup with us. Companies like Sequoia, Sequoia is one of the largest VCs in the world. They have co-invested with us. And the reason why we like co-investment is because that validates that the startups that we're investing into are also being looked at by other VCs and other players, as well as what happens is when you are looking for your next round of investment, when you have people like JPIN VentureCatalysts, people like Samsung Venture, Sequoia on your cap table, then that gives more confidence to other investors who are coming in, and they will easily put in more capital. And also it helps with valuation of the business for when you're looking for your exit and multiple rounds. Good quality investors on your cap table makes a big difference. Another myth that people have is about valuation. A lot of times founders come to us and investors come to us saying that, what is the valuation of this business? Is this a good valuation? Is this the right valuation? And for us, we simply feel that the valuation is about how much a startup wants to dilute. There are various ways you can calculate a valuation of a company, and there is models like DCF and many others. But rather than going into too complicated methods of valuation, what I put here is that a simple, if a startup is in a very early stage and they are looking to dilute 10% of their business, their valuation is $1 million. But for me, as an investor, what I'm looking for is not the valuation. I'm looking for is a multiplier. So even if I'm investing into a startup which is valued at 5 million, but if I feel that that startup is going to grow very fast, then I am happy to put that money at a 5 million valuation, because I know that in 5 months or in a year's time, this startup might be valued at 20 million. So I have made a 4 times or 5 times multiplier. So I'm not concerned about the valuation as long as I feel that this startup is going to grow very fast and I'm going to make a multiple out of it. Another thing which is very important, and this is again another important slide for everyone who's listening today, is that this is a very high risk investment space. So when you're looking, if you go to an investment advisor, they will tell you that you should always have a diversified portfolio, and in your diversified portfolio you will have real estate, you will have bonds, you will have investments into stocks. And again, we recommend that you put in at least 10 to 20% of your allocation into startups, because startups is a very high risk but a high gain investment opportunity. The industry standards are that 90% of the startups fail. So you have to be prepared that a lot of your startup investments might actually fail, because they are not able to raise capital, and there could be many other reasons why a startup can fail. With us, so far, we have been very good with our startup evaluation. We have had, of the 100 plus startups that we have invested into, we've had only one startup that has failed or shut down rather. And the reason why it shut down was because of the government legislation, where they banned one of the startups that we invested is called as CoinX. And it actually got shut down because of the government legislation. And that is unfortunately the reason that we couldn't do anything about it. But apart from that, all the other startups are either doing well or they have been acquired. So, we have had a very good track record. And one of the reasons why we have had a very good track record is also because we have a very high touch point on our startup. We are not just an angel investor who's come in and just giving them the capital, but we support the startup at various stages of their life. So at the very beginning of my slides, I showed you a few brands. So those brands are all my companies, and each brand supports in different phase of of a startup. So if I am at a very early stage, then we have a fund which is called as a 9 Unicorn Fund, and through that we put in capital of $100K into startup, and we accelerate them and we mentor them. When the startup is looking for $2 million, we then bring them to Angel Network, and over here, we again put in capital, but also connect them to various angels who are industry experts. We then have another program where we have signed up mandates with over 100 multinationals who work with us very closely, and the CXOs who constantly are working to make sure that we are coming up with disruptive ideas and making products and services which are the next generation products and services. Then we have global growth programs. So startups, we have offices in multiple countries now, and our startups, when they're looking to grow outside of their own country, we then help them raise capital as well as go to market in different countries. And then we also have growth funds. So, we have funds which are not just giving more capital, but helping them grow from 2 to 10 million of their journey. And then finally, we have investment banking as a part of our service, where we then continuously throughout the journey are supporting them in constant capital raise. So the startup is confident that once it has come into our ecosystem, they will always have capital to grow. Again, one of the things that a lot of people wonder about is how do you get exits from a startup? If I have put in the capital, what is it? How do I actually get my money back? So usually what happens is that when I have put in the investment into a startup and the startup has raised its next round, which is a seed round or a series A round or a series B round, there is another investor who will come in and put in a capital. And when they're putting in the capital, the previous investors have an option to get an exit from the startup. At that time, you can get an exit, and the Series A investor will say that, "Hey guys, do you want to exit at a 5x or a 6x, or whatever the multiple is?" And that's how the early stage investors get an exit from the startup. The other option is always an acquisition as well. So a larger startup or a larger business can come and acquire the business, and that's when all the investors in the startup will also get an exit. So, giving an example of again a Beardo, recently in 2020, at the heart of pandemic, we got an acquisition offer from Marico, and Marico said that they want to fully acquire the business, and they gave us a 5x multiplier, and we all exited from the business. So that is another way that you can get an acquisition. And then finally, if these two doesn't happen, then a startup might grow very fast and look for an IPO in 7 to 10 years, or it can have an equity buyback. So founders, once they become very big, then they might buy the company's equity back from the early stage investors at a certain price. Another point about startups is, when is a good time to invest into startups. So there isn't a right time or a wrong time to invest into startups, but our data point that we have is recessions or has been a good time for investments, because some of the largest startups that are now operating in the world have happened during recessions or difficult times. And you can see the data points here. 25% of the India's unicorns happened during recession. 72 startups happened during recession, which are now unicorns. And now again, we are in a difficult period when we're talking about the COVID-19 and the lockdown. There are startups which are coming up now, which are coming up with a business model which is very innovative, and it's kind of built on a time which is recession proof. So therefore, we are looking at startups now very actively, and that's the reason we invested in 100 plus startups last year, because we feel very strongly that the startups that are raising capital right now are the ones which are going to be the future winners. Again, this is a very good example of a Beardo, which is a men's grooming brand. Gave us a valuation, FMCG brand. So typically you get a 3 times multiplier. We invested into the startup, and in 3 years, the startup has grown very fast, and we got a good exit out of it through a FMCG player called Marico Group. This is another startup we invested into, Innovate, and again, it is into co-working space. And this is just giving you 2 examples. When you come in at a very early stage, like the way we have our 9 unicorn fund, when you invest at the seed or pre-series A round, you can make a very high investment return. So as an accelerator, an accelerator that invested into the startup, they made a 17x multiplier, and someone who came in at a later stage made a 3x multiplier into the same startup. Impact Guru is another startup that we raised. We put in the first capital of $2 million into them, and we also brought in Apollo Hospitals into the startup round. And again, the example over here is that every startup that we invest into, we try to bring in a strategic player into the very early stage of the round, so that they can really help the startup grow and accelerate very fast. And finally, I would just like to say that, this is obviously the first time that, many of you would have heard of the startups and how to invest into startups and what is it to look for in a startup. And to be honest, 1 hour is never enough to understand everything about startups. But if you wanted to learn more about startups, then we do regular pitch days where startups that are carefully selected by us, they come and they present. And we are doing a next pitch day, which is happening on Thursday or 25th February, and a same pitch day happening on Saturday as well, on 27th of February. And this is where you can look at the startups, how they're presenting, and then from there on you can take a decision whether you want to look to invest or you want to continue looking for other opportunities. There are various platforms out there in the market. where you can look for. But again, you have to always think about risk and return rewards in terms of your investments into these startups. With this, I would like to just say thank you for listening to today's presentation, and happy to start taking some questions.
Thank you, Nayan. Very informative indeed. A lot of takeaways for me, especially demystifying the myths, where we think generally it's the technology-backed sort of industries where all these things happen. So that's not the case. And you should look at the multiplication rather than the valuation of the companies and stuff.
Yeah.
So really, really good insights. We have few questions. So I have just taken down the names and I'll ask Ani to unmute Ravi Gadge, please, first of all. Ani.
Mayura, sorry, I was just going to say, can you also bring Gaurav up as well, because he's there as well, and Gaurav is also one of the founders of JPIN VentureCatalysts.
Ani, are you there?
Hello.
Hi, Ravi. Raviji, you had a question?
Yeah. Nayan, thanks for a very informative, very quick, but very useful information you share. I just have a quick question. How the startups project their ROIs to retail investors? What is the mechanism? So from a retail investor perspective, how do you look at it? They say, I will invest £100 in 3 years. What you will give me?
Sure. So as I mentioned, Ravi, usually what we look for in a startup is, when we're investing, we look for a multiplier in valuation. So if I have invested into a startup, let's say £100 at a 1 million valuation, then that startup will go on and grow their business. And once they have grown their business, and let's say they have currently got 100 customers, then they might, in a year's time, they might have 1,000 customers. And because they've got 1,000 customers, their valuation might now be 2 million or 5 million. So because the valuation has grown from 1 million to 5 million, your £100 has now become, maybe £300 or £400 into that startup because of your equity that you've bought into that startup. So every startup, if you put in £1,000, for example, that £1,000 might be worth, let's say, 1% of the company. So as the company's valuation grows, your valuation in the business grows, and that's when when a larger investor comes in and gives you an exit, your multiplier happens at that time.
Yeah. So it at the exit point, you will realize the value. The investor
Correct.
will realize. Okay. Till the time it's a notional value, but the moment. So quickly, a very small. Can a retail investor exit, though there is no big investor who is going to take over? Can a retail investor exit?
Yes, they can exit. So there is something called as a secondary market. So there is a lot of transactions that can happen in a secondary market as well, where you can always exit by selling your shares to another person. But usually what happens is that there are a lot of rights that the founders have. So founders usually would look for it by taking the shares back first, and then if the existing shareholders or the founders don't want those shares, then you can sell it to someone else. So there are certain things that are mentioned in a term sheet which you will have to look for. But a secondary market is a very prevalent one in the world now. And good startups, there is always a secondary trade sale happening.
Okay, got it. Thanks a lot.
And I think if I may just quickly add to that, Nayan, so it is also very much like the listed stocks that we invest in, where you see the business grow. So it comes down to your technological growth, as Nayan mentioned, the number of clients, revenue projections as well. So how close they are. Many businesses might not be able to demonstrate clients because they are either in a life sciences business. But what is beneficial to see is how they're going through the claims that they've made that they will be able to achieve trials and get approvals. So a lot of those things allow businesses to take good shape as well. So by the time they're ready to be acquired. So there are multiple aspects that we look at when looking at a projected return of investment.
Thank you, Gaurav. So the next one, I have the name of Mr. Pras. I think it's Prasanna. Ani? Okay, I'll try and unmute him. Mr. Prasanna, if you can ask your question, please.
Yes. Hello. Can you hear me now?
Hi, yes.
Yeah. Thank you. I have some background in M&As. I do some, my background is information security. And I do some security audits for upcoming companies going through M&As through another piece of work. Now, investment sounds very interesting, but do I get a chance to probe the startup, or do I get a chance to get involved with it as an investor? Or is it more of a read only that you or the company has done some number crunching and they've given me a printout saying, here is what the startup does, basic stuff, and then you invest into it, you will get XYZ? Or is it more of a interactive session? Like what I'm used to is it's more interactive, where I provide my services and I go and audit companies during M&A. So I help with valuation of the companies, but not thought about investment into it. But now if investment is the way, then I'll be interested if I get a chance to get more involved with the company, to be honest with you.
So thank you. That's a very good question, and I should have added that slide as well. So one of the reasons why a lot of investors at angel level put in the capital is not because they're just looking for the next level of returns, but also because they're looking to get very involved with startups. So when I put in, let's say if I put in 100K into a Tesla or 100K into an Apple, I am never going to be able to interact with them, and I'm not going to be changing their destiny by any ways. It is just a stock market play that is happening. But when I'm putting in that 100K, or even if I'm putting in that 10K into a startup, because I'm directly connected to the founder. So just to give you a little bit more insight, all the startup founders generally, when you're investing through us or through any other platform as well, usually you will have a direct contact with the founders, and the founders really appreciate the angel investors who are coming in and putting in capital with them at a very early stage. And I'll just give you another example. Recently we had a startup which we invested into, and one of the angel investors, they put in only £5,000 into the startup, but they actually connected the startup to the FA, to the FA teams. And that was invaluable. You might put in 100K, but you might not have connection, or you might not be able to give the insight. But the startups are not just looking for the capital, they are also looking for what other value you can bring in as an angel. And this is where we the reason why a lot of startups come to us is because we are not just a fund, but what we do is we are democratizing the angel investment. So people come to the platform, they come and collectively invest with us, and therefore 20-30 people they are adding not just capital but a lot of value to the startup.
That sounds really good. I'll contact you. I'll reach out to you guys offline via LinkedIn or something, because obviously I'm interested in doing investments. Yeah. But I also was seriously considering on a startup line, or rather I did do a startup, but I was struggling with people to help. So probably I'll reach out to you from both perspectives.
Of course.
Thank you.
Thank you.
I think if I may, Mayura, sorry, just add one important point. I think, see, it is very important for startups to get the right support from a mass audience, which will enable more success for them. So they are very, very active and keenly looking for collaboration. We always recommend people that the best way to build trust in the startup to also take your support seriously is by investing into the business in a small or large capacity, whatever is comfortable. Because when you have skin in the game, then the startup founders know that you will also not let your money go down. So because of that, you will make all the right connections, all the right kind of introductions for it to success. Otherwise, many support and collaboration which are offered without investment are on a best effort basis. And sometimes people don't come through. So this is the best we always recommend. If you want to go long, then come into the game.
Absolutely, that makes perfect sense. Thank you. I'll be.
Thank you. Thank you. Next one is Mr. Vikram. Ani, if you can unmute Mr. Vikram.
Yeah, I'm asking to unmute. Vikram, go.
Hello, can you hear me?
Yes, we can.
Yes.
Hello. It was really useful to hear Nayan and Gaurav. And I think probably one of my query has been answered, but let me just repeat so that you can just refresh it. So I think it was just about how does your investment model work? So if we approach you and so do you agree some sort of a percentage, and then how do we then get the proportionate returns based on that percentage, or how does the model work really?
Sure. Yeah. Vikram, thank you. There are various models in the market that work. So a fund might take in some kind of a profit share with you. Some platforms only take an upfront fees. So there are various combinations in the market that are available from a perspective of investing into a startup. In our case, what we do is we have some sort of a membership fee that we charge, and we charge a percentage of investment to the investors, but we don't charge anything at the carry towards the end. So therefore, the whatever profits you're making is all yours. And the other important bit that I would like to just highlight here is that in every startup we put in our own capital as well. So we have a skin in the game. Because a lot of times, you will find there's a lot of intermediaries or platforms which are just showcasing startups, but they are not putting in their own capital. All the startups that you have seen and the ones that we have invested into, we have put in our own capital. So either it's, me, Gaurav, or one of the founders who's putting in the capital, or the shareholders who's putting in the capital, or a company's balance sheet we are putting in the capital. So, so we are equally also taking the exposure into a startup, and we truly believe into the startup, and that is the reason we're bringing them on the platform. We're just not, so that's one point. But yeah, again, there are various models there, Vikram, in terms of in the market that operate. So depending on which model you come into within the ecosystem, you will find a 220 kind of a model where they take 2% fees and 20% carry at the end. So yeah, so it really depends on the platform that you go in.
Okay.
Hope that answers the question.
Yep, yep. So probably I have got this next question. It's kind of linked. So in that case, how do we track the value? So on month or year, depending on the model, I get that. But is there how do we visibly track the value?
Yeah. So in our case, we have an investment management team. So let's assume that you have put in capital into a startup, and once that startup has raised, has closed a round, then what will happen is on a 3 monthly basis, on a quarterly basis, we have a team which is dedicated only to take accounts from startups in terms of what is happening with their growth, and constantly report to the investors in terms of what is happening in terms of the next round of investments. What is the number of customers, what is the revenue rate, what is increased, and how the whole journey is growing. And we constantly keep you updated. We have in our business, we also have a portal which we give you access to, where you constantly can see and monitor the growth of your startup in terms of valuation.
Right.
So when the startup is now, let's say, raised the next layers. So I'll give you an example. One of the startups had come to us in 2019, and some of the investors in the UK, they invested into the startup at a seed stage. And when it came for the next round, it was in a Series A. So the same investors who came in 1 year's time, they had a 3x multiple on their round within a year's time. So, it's just, again, depending on the stage you come in, and then we constantly keep you abreast of the growth of the startup. And you have access to the portal anyways at the back end, so that you can constantly see the growth.
Okay, that's
And
good.
then the
Thank you.
exit, again, just to give you a little bit more on the exit part, what happens is that it's not up to you in terms of the exit. The exit happens collectively. So, when Nayan is exiting, Vikram will exit as well at the same time. Usually we all exit together as a group. So, we'll all make multiple returns together. Basically.
So is it like we have got no choice but to do it together, basically?
Yes, usually because what happens is that again, you have to think about it as a collective thing. Like, let's assume that, you want in a startup, if a startup is raising 1 million pounds, and, of that 1 million pounds, if you put in 10K, then, you are a very small, your shares is a very small fraction, right?
Yeah.
But as a
Yeah.
group, if we put in a 1 million pounds, then it's a sizable number. So when a larger investor is coming in, it's easier for them to take out 1 million of investors and replace it with their own capital, rather than just putting in 10K and replacing it. So usually you get a better deal when you are having a large pool of investors exiting together.
Okay.
Sorry, can I just interrupt? Let's move on to the next question. So, we can, if you have a few more questions, you can connect one-to-one with Nayan.
That's good. But I think that was really useful. Thank you.
And just to let everybody know, there was some confusion initially with regards to the time. So we waited a bit before we started. So we are just going to extend this another 10 minutes or so. We're going to take questions. We have few more people in the list. Can we unmute Mr. Shrikant, please?
Yeah, Srikant. I don't think, is it SR?
SREE, yeah.
But there is no one Srikant here just now in the meeting. Unfortunately, I can't see him. Is there anyone else?
Okay, we'll move now on to Mr. Ujjwal.
Okay, Ujjwal, unmuting now. Go.
Hi, Ujjwal here. Thanks, Nayan and Gaurav. Gaurav, you partly answered my question. My question was about the opportunity to invest as a lump sum so that I can spread my risk across multiple startups, because some might be hugely successful, but some will be failures. So that kind of gives us a cushion. So you said it's possible. My other question is there any collaboration model you work in terms of tax benefits using SEIS, EIS, and VCTs?
Yes, absolutely. So any deals which are from the UK that we decide to back and invest into, our preference always is that they come with SEIS, EIS as a tax incentive. We don't look at opportunities based on if they are EIS, SEIS, because that is just a caveat, but that is not a reason for strong success of a business. And that is where I think investors, because of the safety net, they go with EIS, SEIS investments. You can lose your capital. So when we invest into something, we definitely make sure they are rock solid businesses which have a very high chance of delivering strong unicorn projected returns. They are an EIS, SCS incentive. They have the incentive. That is always a bonus.
Okay. One more question. Say out of 100%, how many are usually successful and how many are failures? What is your win ratio?
So I'll tell you the industry first, and I'll tell you us. So the industry, because this is a very high risk asset class, there are a lot of concepts and ideas, and so its industry has around an 80 to 90%, 80 to 90% failure rate.
Failures,
Yeah. In our approach, because we have our own skin in the game, we are very strategic in our investment approach. Our failure rate is around 6%. So that a single digit of 6 is because, for us, it's not about quantity that we'll invest in, 10,000 startups and we'll expect some to grow.
Right.
Over last 5 years, we've evaluated around 15,000 startups. We've taken them through, several stages of due diligence and approvals, and then invested in them. And once we invest, we've only so far made 150 startup investments. We've backed them in next rounds, right? So our ratio of rejection is very high, but when you pick something, we put all our weight behind it to make sure they can scale very, very fast. Okay. We've only so far of the 6%, we only so far had only one business which actually failed.
Okay.
And that too because it did give investors a 7x return very quickly. It was CoinX, but because of the crypto regulation getting quickly banned in India, nothing could be done around it. But sometimes we see that founders have complications in personal life, or they can't get along, or they hit a wall for some reason. We still help the investors, the founders, and because our capital also there is to somehow salvage some valuation from it. So even if you put in $100, we'll still try and squeeze 50 to 70 to 80 from it, so everyone can benefit a bit from it.
Okay. One more question, last
Sorry,
one.
can I interrupt here, please? If you have more questions, can you get in touch with me
Sorry.
directly?
Okay.
Thank
sure.
you. Thank you very much. So I request everyone to just stick to one question for now, please, so that you can, have one-to-one with them directly later on. There was one more, which was from Mr. Amrit. Hani, if you can unmute him, please.
Yeah, Amrut Bhugle, trying to unmute. Wait. Amrut, I'm trying to unmute you, but I think you're rejecting.
Hello?
Yeah, go please. We can
Right.
hear you.
So I've got a couple of questions. One is that what's the minimum amount that you expect from an investor on your platform? The time frame that one can stay invested before he can exit, and what are your charges when we invest with your platform?
Sure. So I'll answer the second part first. So the charges for us. So we want to keep the costs lowest possible in the industry for the startups because they need money right now. So we don't want to charge extortionate fees, cash fees to them. Because of which we pass on some of that cost to our investors, and we've always had no pushback. So you have to be a member to invest with us because we have a whole army of teams. So we have high cost of deal curation, which is because our quality is very high. So the membership is £600 a year for individuals and £1,000 a year for institutions. Our investors can stay, and 2% a transaction fee. So just like in property, where you pay a fee, it's same for us. So cost is shared between the startup and the investors, which works really well. Secondly, investors can stay invested. If you are a large ticket investor, then usually you can get a direct reflection onto the cap table. And there are different privileges. If you are investing a smaller ticket in the grand scheme of things, then it is based on when the collective of JPIN or the consortium has decided to exit or has been asked to exit, because the returns, we feel this is the right time to be able to do it. We've been doing it for a while, so we know the pulse and when is the right time to exit. Does that answer? I hope.
Does it have tax implications if you withdraw early?
Mayur,
Does it have to have?
Sorry. Can we stick to one question, please?
Sorry.
I think I'll just take the tax question quickly because I think I can see it on the chat as well. So in terms of a tax, generally it works as if, you're any other investment. So for example, I had mentioned earlier that you do get 50%. If it's a UK investment, then there are certain SEIS and EIS benefits, which are your tax benefits. But apart from that, there is a capital gains, there's inheritance tax benefits. So again, I would request you to talk to your tax consultant for the UK startups. For Indian startups, again, there isn't any specific tax benefit as such. So, whatever capital gains that you will be charged accordingly for that investment. It's similar to, the way you treat your mutual funds or your, if you are getting any dividends from your any other listed equities. It's the same tax treatment.
Mayura, are there any other questions? Otherwise, I have one.
So
can I ask one? Can I interrupt and ask one quick question before we wrap?
Yes, please go ahead.
Sorry, this question is for neither Nayan nor Gaurav. So sorry about that. Mayura, just because some people join late, can you answer my question about what is OMPEG all about?
Yes.
In 30 seconds. Thank you.
Yes. So OMPEG stands for Overseas Maharashtrian Professionals and Entrepreneurs Group, a community-based business networking group founded in April 2016 by leading influencers and entrepreneurs within UK. The idea was to inculcate a spirit of entrepreneurship within Maharashtrian community, specifically from the UK, to connect professionals and encourage them for entrepreneurship. If you want to know more about OMPEG, please visit www.ompeg.org.uk. And if you wish to become a OMPEG member, we will put the details in the chat window. I think we have one last question.
Okay, let's take a last one. Yeah.
Yeah, close it. It was from Bhakti.
Okay, so I'm unmuting Bhakti now.
Hi there, guys. This is Mayur. I'm with Bhakti. We joined a bit late, actually. Some confusion there. but I guess I get the gist now that this is mainly about the investments in the startups in the UK. My question was about, how do you balance the investments between, what you invest in the UK and the percentage what you want to invest in India. But I guess maybe, I don't know if this is a relevant question, because I guess this is more about investing in the UK through the startups, right?
So actually we invest into, so thank you first of all, and apologies as well, because there was a confusion in the email. There was a 1 hour change, which was an admin error.
Yeah.
So thank you and apologies as well for, the mistake there. In terms of the investments, we are investing into startups from India as well as in the UK. So, we have, the 102 investments that we have done last year. Majority of those startup investments have happened in India.
Right.
And India is one of the largest growth areas for us. Again, you missed the presentation, I assume. But, in India, we are seeing tremendous growth, and it's the third largest startup ecosystem of the world now. And therefore, we are heavily investing into India. And again, we are the largest early stage investors of India. And the UK, we have just started investing into UK, and we are building our platform for the UK investments as well. Our plan is every year we want to invest into carefully selected 20 plus startups in the UK and around 50 to 60 Indian startups. So we are thinking of around 70 to 80 startups that we would curate and bring onto the platform to look at and invest into. And another thing I wanted to just highlight also was that there are two stages of startups that we bring into the ecosystem here. One are very early stage startups which are looking for seed capital. So that's where we are looking for investors to put in anywhere between 5,000 to 10,000 pounds per startup. And then there are some startups which are growth stage startups which are raising anywhere between 2 million to 20 million pounds. And that's where we are looking for investors to put in 100K per startup. So there are two different scales at which the startups are, and therefore the investors can come in at different points to invest into those startups.
Okay, thanks, Nayan.
Good. Thank you.
I think
Thanks,
just
Nayan.
to answer that, quickly, also, is all our deals will have an India growth focus. So, you could diversify to a question between UK and India, but we will only back deals which have a very clear India growth story and we can support them. Thank you.
Thank you. Thanks, Gaurav. So we will formally close the event now. Just a quick vote of thanks for all of those who took time to attend the webinar today. And thanks to Nayan and Gaurav for finding time and conducting this webinar. Just for those who have missed probably the initial part of this, there will be a recorded version of this webinar. It will be made available to Gaurav and Nayan, and as well as would be put on the OMPEG's YouTube channel. So if you have missed the beginning, you could always view that and see the whole webinar. Just on quick notes on the next events that are coming up with OMPEG, in association with OMPEG, Her Transformation Masterclass by Pradnya Punekar and Nilesh Vaksode on Saturday, that is next Saturday, 28th February from afternoon 2 to 3. It's an exclusive event for women focusing on unleashing their true potential. And there's another event on 21st of February, that is the Sunday, which I will be presenting, which is a roadmap to successful property renovation. And I'll be focusing on design ideas, planning processes, building contracts and budgets. So if you are a homeowner or a property investor, please, this is the webinar for you. Please do attend. For any further events that are lined up on OMPEG, please do visit OMPEG's events page and you can register from there. And we will now formally close this event. You can hang around for another 5-10 minutes for a quick chat with the speakers. And Ani, you can stop recording now.